I know you must heard about all the strategy on Forex. Strategy like smart money concept, inducement strategy, inner circle trading strategy, indication strategy and many of them. I would like to tell y'all to forget about those strategy and focus on this strategy called demand and supply. In this video, I will be telling and explaining in details why you need to focus strongly on demand and supply strategy. But before getting into the discussion, I'm Divinee, also known as CryptoBoy Pat on YouTube. I do talk about trading in general for both beginners and experts. So if you want to know more about trading as a whole, you can consider liking and subscribing to this channel. Without much saying, let's get into the discussion. The reason why I said supply and demand strategy is because even before the internet came into existence, supply and demand has been in existence for a long time before the smart money concepts, inner circle trading concept, fair value gap and other strategies came into place. Ever since I learned demand and supply, I have been skyrocketing my gains and making a lot of money with this strategy called supply and demand. Firstly, what is supply and demand? According to Google, demand is the willingness and ability of consumers to purchase a given amount of goods and services at a given price, while supply is the willingness of sellers to offer a given quantity of goods and services for a given price. This is also much applicable to demand and supply on Forex and crypto trading, but in Forex and crypto, supply refers to the price area at which the traders usually sell. This area is present above the current price where there is higher selling interest. When the price hits this level, the unfilled orders get completed and bring down the price, while a demand zone is a price area at which the traders usually buy. This area is present below the current price where the buying interest or potential is higher. This means the demand zone has many buyers available due to many buying orders at that level. With this point I just made in this image right here, I'm very sure you can spot the right demand zone and the supply zone. Yeah, if you thinking of these zones right here, then you're right. As you can see, the price tends to respect the supply zone as sellers sells, and price tends to go up when it get to the demand zone as buyers buys the goods and service. With this strategy, you don't have to always look at your screen. You just have to identify these zones. After identifying these zones, then you place your entry and check back for take profit, missed entries or stop loss. Sorry, I said stop loss, but people do get stopped out of trades, and this is because they can't identify strong supply and demand zones to pull off with the strategy. So in this video, I will be giving you 3 tips and guides on how to know a valid supply and demand zones. These tips will help you in marking out a valid supply and demand zone and avoiding stop loss. These 3 tips and guides are: 1. Strength of the move. When marking out supply and demand, we need to look for the big moves in the market before doing anything or marking out any zones. These big moves we are looking for is to know where the big boys and institutions are coming into the market so we can trade with them and not against them. After identifying the big moves, then we mark the beginning of the big move or the last opposite candle before the big move. Just like this. Please note that the big move must contain a minimum of 3 big momentum candlesticks, just like an engulfing candlesticks in the hourly time frame, because the lower time frames aren't that valid, price can break them anytime. 2. Time of the move. When price making this big moves, you'd either see it on a reversal pattern, which is rally base drop, drop base rally, or you will see the big move on the continuation patterns, which is the rally base rally or the drop base drop. This base simply shows the number of time the price was in that range before the big institutions and banks came in and bought in. If the base on the hourly time frame has above 6 candles, this means that it has collected all the orders and little or no orders are remaining there to fill any more, so the demand or supply zones may or may not hold anymore. So when looking for a supply or demand zone, please note that the zones must have below 6 candlesticks so as to come back and collect all the remaining orders in that zone before going up or down again. 3. The last tip on the list is the fresh zone. One of the main importance of marking a supply and demand zones should be based on fresh zones, meaning that the supply and demand zone shouldn't have any price actions that has tested it before. Just like this image right here, you can see that the demand was strong at first, but price action tested it again, which is went down the second time, and finally, for the third time, price action broke out of the zone. This is to tell you that fresh zones always matters in demand and supply strategy. Now what I want y'all to do is to go mark out demand and supply, and then you can send it on my Telegram account with the link on my description below for me to check it out, and any question you'd want to ask, you can ask in the comment section. This will be the end of the video. If you want more of these trading educative videos, you can subscribe. You will be getting notified when I make next upload. Do not forget to like, share and trade wisely. Before you go, I'm sure you'd want to know the top 5 main candlesticks I use in my demand and supply zone. So I urge y'all to click and watch this video over here. Thanks.